Okay, folks, good morning and welcome to Swing Trading today. It is around 6:50 a.m. Eastern Standard Time on May the 29th. All right, so going into the week, we anticipated weakness in the markets, and we are certainly seeing it this morning. We saw it yesterday after a bearish key reversal, and there's no reason to expect that this market has seen a bottom yet. Now, what we're looking for today is an opportunity to step in and to begin buying extreme oversold stocks. You heard it. I want to buy stocks with RSI sub 17, sub 16 at historical support levels. That's the key, at historical support levels, because they provide the best risk reward entry points right now as this market weakens up. Yesterday, we booked profits, a little over 5% on oversold stock Visteon. We have another one that we are positioned in now. We're looking to add to. So there are opportunities to the long side here because ultimately we will get a counter trend rally in this market, and those names which are heavily shorted should stand to do well. Now, what's driving the market this morning? It's the same deal. You have the Chinese trade war, and now the fact that Theresa May is no longer Prime Minister of Great Britain. You have the Brits who are poised to leave the European Union with no deal. And that is going to roil the markets even more than if Great Britain had a second referendum or had they had a deal. So a lot of headline risk out there. Add to that fact that as we proceed into June, we're going to hit the summer doldrums. Volumes will dry up a bit, making volatility the name of the game. So a great environment in which to trade, but you need to pick your points. So let's begin with the pre-market activity in the S&P 500. This is a 4-hour chart. These will all be 4-hour charts. We are down this morning almost a half percentage point. We were down lower. You can see that this 4-hour bar, which opened up at 5 a.m. Eastern Standard Time, is flashing a bullish key reversal, but it is being stopped here at this upper band of resistance. Now, if we break through, retest, perhaps we'll rally on the day. But as it stands right now, it's a weak morning. The trend is clearly down. Let's check out the NASDAQ. The NASDAQ is down over a half percentage point. We are flashing the same bullish key reversal, this 4-hour bar, but it doesn't matter where we trade intra-period. What matters is where we close. So do we close at the highs of this bar, or do we sell off and break down to new lower lows? We won't know that until 9 a.m. Eastern Standard Time. So let's not hope for a rally when we should fear right now, because the trend is clearly down. Taking a look at the US dollar, because that'll segue us over and into gold. The dollar is rallying today. Remember that last week we flashed a bearish key reversal on the week, and it all started here on the 23rd with this 4-hour bearish reversal bar. So a lot of technical damage has been done to the dollar, despite the fact it was up yesterday and it is up today. Now, going over to gold. Gold had a good overnight session. We are up over $5 the ounce. We are at resistance at $12.90. And we are putting in higher lows. Now, the gold miners have not been participating in the move higher on gold. We are long of those miners, and we will look to add on strength. Let's leave off with Bitcoin. Again, a 4-hour chart. We're down about $50 right now. We were in a nice wedge formation, but we did break down below this lower band of support. So we have a little bit of a struggle going on here. I'm going to hold to our 9,500 price target, which I put out last week. We hit a high of 9,035 over the weekend. We are long of Bitcoin. I don't plan on adding any more right now, but we may in the near future. And we'll leave off with the 10-year Treasury note. So if the note is rallying, that means yields are pulling back yet again. So at current, we have yields on the 10-year, which are at lows not seen since December of 2017. And that is the bond market sending us a signal that all is not well with this economy. So I know it can be boring and confusing, but when the bond market sends you signals about the health of the overall economy, it's best to modify the size of your stock portfolio accordingly. So raise stops. We took some losses a couple of weeks ago, but in hindsight now, given where those positions are trading, we look pretty smart in the fact that we were able to identify up front that the market was weak and would probably get weaker. We cut losses and we moved to the sidelines and now are positioned to take advantage of the sell-off in the market rather than hoping to get a rally so we could sell. So let's try to be proactive. And that is it for this morning, folks. Everybody have a profitable trading day, and I will talk to you soon. Be well.